Today, I'm revealing whether the benefits of CBDCs are too great to ignore, because that's what one analyst from the Financial Times says, that while concerns over privacy and control are not without substance, there are strong economic gains to be had. Let's dive into another episode of Chain Spotting. So this one is a story from the Financial Times by a guy named Toby Nangle. Let's hope we don't mangle him after we listen to it. We're talking about the benefits of CBDCs and that they're too great to ignore. CBDCs, for those of you that don't know, are Central Bank Digital Currencies. They're essentially monopolized versions of what could be cryptocurrencies. So they're going to be proposed to you as a technical innovation, but they're actually a monopolistic innovation. They're a way for the central banks and for the government to maintain control over your finances. I thought this was super interesting because it's been a while. It's been a while since I saw something in favor of CBDCs. I hadn't seen something about CBDCs in a while, to be honest. But it'd been a while since I saw one. It's like blatantly, they're too good. We can't ignore this. This needs to happen. All that sort of stuff. Yeah, let's dive into it because it's interesting. Objections to central bank digital currencies are legion and vociferous. The concerns over privacy and control are not without substance. In 2020, Fan Yifei, then deputy governor of the People's Bank of China, boasted that the digital renminbi would provide the central bank with access to full transaction data, allowing artificial intelligence to scan for illegal and terrorist activities. From that, it is easy to see how a CBDC could be used as another tool in the kit bag of an authoritarian government. Digital currency plans in the UK and the Eurozone incorporate meaningful checks against government snooping, but Western publics are far sold from them. Now, I should state that the UK right now is in a pretty dicey situation. They've become somewhat of a police state, a nanny state. People are going to jail because of what they're posting on social media. So you can't say certain things. There's literally people getting arrested or detained because of what they're posting on social media. And if it's okay with the established narrative, if it's okay with what the government is doing or what they're saying, it's a pretty fucked up place. So whether you say to me digital currency plans in the UK are going to incorporate meaningful checks, I'm not too sure how much I believe that or how much legitimacy or credibility the government has in the UK right now, or Europe for that matter. Like, these are both places that aren't in the most best standing places in terms of personal freedom, personal liberty, freedom of speech, and all that sort of stuff, keeping that in mind. A recent consultation on the Bank of England's CBDC program drew more than 50,000 responses. An online petition asking the government not to allow any CBDCs to be programmable, allowing the issuer to restrict how people use it, amassed more than 30,000 signatures, even though such a move is not planned. It seems that Robert Kennedy Jr., the new U.S. Secretary of Health, captured the fears of many when he wrote that CBDCs grease the slippery slope to financial slavery and political tyranny. One of Donald Trump's first acts in his new presidential term was to ban the creation of a USDC CBDC. That's not a bad thing, as we're going to see now. Like, keeping everything in control of the government isn't necessarily a good thing. It can help sometimes, it can be useful, but it's not something we always have to be striving for. Just keep that in mind. Same the other way around. Like, all these deregulation freaks and free market capitalism, laissez-faire lifestyles. It's not all that good. All things in good measure. The existence of a government, whether that's small, medium, or large, the existence of a private sector, small, medium, or large. Look at your own life. What part of your life are you overly enthusiastic about or overly focusing on? Even if it's that's inward, as all the gym bros and lifestyle bros tell you, that means you forget about the external life, and that's not good for you either. And in some countries, well-regulated faster payment services look to accomplish many of the same objectives of CBDCs without requiring the creation of an entirely new form of money. He names Brazil, India, which have lowered transaction costs. These systems work by better connecting the existing commercial banking network rather than cutting banks out of the payments picture together. But, argue John Bardier and Michael Kumhoff, two senior economists at the Bank of England, the price of adopting CBDCs could be substantial. Interesting, isn't it, that two economists from the Bank of England, aka the country's central bank, would talk about the substantial prizes of adopting CBDCs. Maybe, just maybe, because otherwise they're out on their fucking asses. Their analysis, calibrated with US data, considered an initial stock of CBDC equal to 30% of GDP issued against an equal amount of government debt. They just want to issue a random amount of money according to the GDP against an equal amount of government debt. Who pays for that debt? Future generations have to pay for that debt. Right now, there's a massive debt problem around the world. You want to have more debt? This is the problem, man. It concluded that adopting a digital currency on that scale could permanently lift GDP in their model of economy by about 3%. Permanently, what do you mean? Like permanently per year, permanently per decade? Permanently? That sounds suspicious, to say the least. The gain comes from materially lowering the interest burden on government, reducing distortionary taxes, and cutting transaction costs. CBDCs would also bolster the role of public money, existing today only in the form of physical cash, at a time when its use is diminishing. Cash's share of transactions in the UK has shrunk from more than 60% in 2007 to only 12% in 2023. Cash Fridays, guys. I do Cash Fridays. On Fridays, I only buy things with cash. Keep the privacy alive, keep the anonymity alive, keep the trustless form of transacting alive, and make it easier for the commerce or the merchant to sell you stuff, receive money. Cash Fridays, the way. Increasingly, it is not feasible to pay with cash. I fucking know. This may not pose a problem if the market for private payments is competitive and if security concerns are absent, but this is not the case. Here he does tell some truth, this Toby Nangle. So far, competition has not worked in bringing down the cost of private digital payments. Maybe that's because Visa and MasterCard, which together account for 95% of the transactions, have a monopoly, and so they're scared and they charge whatever the fuck they want to. I was watching a video the other day in the US Congress where I think in just Montana alone or something like that, they made like $1.2 billion off transaction costs. All they're doing is sending zeros and ones across the internet. It's fucking free. We sent a message to somebody and you sent an email to somebody. That's what it costs these companies. There's obviously other stuff that needs to go into it, but the actual sending of money isn't that. It's just, yeah, it's bullshit. Moreover, there's a national security case for CBDCs. In an era of mounting geopolitical division, nations may increasingly view digital payment infrastructures as strategic assets, sovereign capabilities too vital to entrust to foreign firms, says Jen Larson, head of geoeconomics at Eurasia Group. As such, it makes sense for the EU and the UK to develop their own digital payment ecosystems, even if the same imperative is absent in the US. So in an era of mounting geopolitical division, you want to continue dividing things by creating your own siloed payment systems. That makes no fucking sense. Not here. Ni la guerra la hi, ni ahí. I feel like in a time of increasing geopolitical division, you'd look for a neutral money system. If only that existed. Use of physical public cash is fading fast. While the project risks of getting CBDCs up and running are substantial, the economic prize could be meaningful. With proper safeguards around privacy, CBDCs will set the baseline for digital currencies while offering a benchmark alternative that helps regulate commercial pricing. Their use should be not forced on citizens, but their benefits are too great to ignore. So he ended on actually an interesting note, this Toby Nangle, which is, if this is a voluntary system, not forced upon their citizens, you can use it however you want. You can decide how it is. You open source the code base, and then you let people think about whether they want to use it or not. Then that would be all right. But then again, this is the government that we're thinking about, how they're going to use it, how they're going to maneuver it, all that sort of stuff. It's all up in the air. The benefits of CBDCs are too great to ignore. I'd say the risks of CBDCs are too obvious. Privacy, control. Let's say, Toby, Today, you've got a Democratic Party in power. What happens the day it's totalitarian or authoritarian? It's happened before. It can happen again. Money can always be wielded and yielded as a political weapon. It's, yeah, like, it's just too dangerous. It's just too dangerous. We've seen it. We've seen it with private sector payment systems. We're going to see it even worse with public sector payments. Like WikiLeaks got shut down. You had Operation Choke Point 1.0. 2.0 is kind of there, but it's not really there. So what's going to happen when the government controls it? Keep all this stuff in mind. Let me know what you think. Another episode. Remember, subscribe, like, comment, choose your news. I'll read you next week.